Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the channel. For those of you who are new, this is the Greedy Trader channel. So here we talk about all things trading, and most importantly, we don't do any BS. I like to pride myself on the content that I provide. For those of you who have never heard about me, please do your due diligence, right? Go through my channel, see what it is I talk about and how I deliver it, before you even think about making a comment about what I do. Anyway, guys, look, I always promise everyone who comes here that you are going to get value. If you've popped onto this channel for the first time, you've never, ever heard of me, or you don't know what it is I do, then I can guarantee you that you are going to get value if this is your first time here. Like, that's because, you know, I've been in the business for over 15 years, you know, professionally, retail professionally, if you want to call it as well. I've been on the sell side of the business, so essentially it means that I've just been on the institutional side. I've done a lot of what I think is really good work in this industry overall. Now, for those of you who are on my Discord server, don't worry, I will leave a link in the description below, so if you want to know a little bit more about how we function here. For those of you who are there, you probably see that I do a lot of stuff around option premium selling, which is one of my core tenets of you know, growing your income, your wealth. I do a lot of option premium selling. So I'm big in the equity option space at the moment. I manage a portfolio, and of course I cut my teeth trading Forex, commodity futures, you name it. If it's something to trade, I've traded it. I like to think of myself, I spent a lot of time trading cable. So, and I know you guys love Forex, and because that was something I did when I was a little bit younger, now I like to think I've evolved more holistically in finance. But when I was a younger person, when I just started out, like most people, Forex is really easy to attack. In fact, I started to trade Forex when you had to essentially wait a minute for your trade to go through.
What the fuck, dude?
Now it's really funny. You can do everything in more or less milliseconds if you're using like a MetaTrader type platform. But if you're using some professional stuff, we're talking micro nanosecond speeds. But back when I started, that wasn't the case. So most of the time, if you had a MetaTrader platform and you clicked buy, the broker will send you a pop-up message saying waiting to execute your order, and you'll be waiting there twiddling your thumbs, and that order might not go through. So those delayed executions were things that were really common. So I started back when hardly anyone was trading. Now everywhere you look, everyone's a trader. It's so interesting. But in any case, I like to think that because of where I'm coming from, one, I know how hard it was. Two, I know the challenges I had. Nobody in their right mind when I started would want to be a trader. Like, no one in their right mind. Everyone would be like, look, you know, like, this is clearly a scam, right? And I think for many years, I watched people literally call trading a scam. And it's perfectly fine because, again, like I said, if you were around in those days, it probably would have looked a lot like that. And that's the honest truth. In any case, guys, today it is not the case. Most people now are very efficient at doing it. There is definitely some really good traders out there, some good competition, but the vast majority of the stuff out there is just pure, utter bullshit.
Ridiculous bullshit.
There's no other way to color code it, right? There's so many people, and a lot of you are going to get sucked down that rabbit hole because you might like Lamborghinis, you might like you know, I don't know, the dog chains, or you like Rolex watches, and you know, you maybe you come from a background where you really want to do this because you need to provide for your family. And what is out there today, I mean, in the job market, it's obscene. The fact that companies are allowed to do what they do and treat people the way they treat them and handle employees the way they do is just, it's insane.
What is wrong with you?
And I understand that, and I can categorically say that I understand that it doesn't pay to work these days. I mean, it really depends on, you know, a lot of it depends on your background, your belief system, your societal pressures, depending on communities that you come from. All of these things can impact, and I totally get it. So already from what I'm telling you right now, you can tell that I'm not a BS kind of guy. I'm never going to be telling you that, oh, if you do this, you're going to be able to buy a Lamborghini next week and you're going to all be rich. No, that's not how it works. If that is your expectations, then I seriously think you should consider something else. Anyway, today, that's the point of the video. I went off tangent there and I apologize, but today I'm going to show you guys how I build my own trading strategy that I know 100% works. I'm going to show you step by step, and I'm going to use Cable to do it because we have, if you watch my previous videos, we have been tracking Cable for some time, and we've tracked it, and I've built, someone asked me on the comments of one of my videos, where can I get that indicator that you use for volume trading? It's not an indicator. I do it by hand, and you know, at the end of the day, it's amazing people think this is an indicator. Yes, you can probably get this stuff coded into an indicator, but I don't want some program or indicator getting it wrong. I don't want to spend my days with a developer just trying to work out what's wrong. This is actually really simple. It takes me less than a minute to do it. So I'm going to show you how I build this very, very interesting picture that I trade off day to day. I'm going to talk specifically about what's gone on today, what's gone on in previous days, and what we can look forward to as a trade. So for those of you who have been following my videos, you know this is going to be a learning experience. For those of you who are new, I promise you, if you stick around for the next couple of minutes, I am going to change your life. If it's not already changed, then it's going to change today. I can guarantee it. All right, guys. So let's start from what's going on right now. So I posted this morning in the Discord server. I was letting people know that, look, we had a very, very, very big move 2 days ago, right? And it's something that we had been preparing for. Now, what did that look like? We can see that on the 4th of April, Thursday, it's 4th of April, we had that huge supply come in at the time. So we had the big demand move that came out of the 3rd of April that pushed everything up. And then we saw the supply come in, and we can tell that because of the volume, right? So again, if you haven't seen my video on this very move, check out my other videos, you're going to find it there. And then we started to sell off. Now, what did I say to you guys? Is that we are going to drop into the demand zone, and that is where you want to be. So if you were short at the top, which is where you need to be short, because based on my trading trifecta, which is you want to be trading from a liquidity high, right? So liquidity is an important aspect, and that means you are selling at premium prices. So the dominant direction was to be short, right? So a lot of you did take the short position because I saw some of you getting excited about it. Now the key is, did you hold that short position till we hit the demand zone? Now I know a lot of people might not have done that, because traditionally I would teach that if you've seen a drop into the day and you come into another major session, let's say for example Europe, you want to exit that trade rather than stay in that trade. And that's what happened here. So you would have been short at the top. So let's say you were short at the structure break, or you were short on the pullback. I always advise that if you've seen a lot of supply come in and you start to get confidence in the supply zone, then you want to set at the base of the supply zone to get short, and then you stops above, right? So it gives you really good risk reward profiling. And as we start to sail lower, I would advise people to cover as we came into Europe, which would have been roughly about, where are we? 7 a.m. So as we entered 7 a.m. and we had this flush up, that would be a cover on that trade. Because what you don't know is, are we going to get a European session that is going to push us a lot higher, maybe back into that supply zone? We don't know, right? So again, if you didn't do that, then we hit the demand zone eventually, right? So we did that in the US session. Now it's an immediate response. The response from that demand zone was pretty clear, that you wanted to be a buyer with stops below the demand zone. And so that was the picture over the past prior days. Now let's talk a lot about what's going on now. So and one of the things I've said to traders is that based on the trifecta, the first thing you want to look at is the volume across the board. So let's zoom into this a little bit. I like to get a really clear picture. So we can see that we had a huge climax here, and that was on the 5th of April, 1 p.m. New York Open. Time is another important part of the trifecta. So we've got volume, liquidity, and time. That's your only interest. Time. It's 1 p.m. Major liquid session, major center open, New York. We do get a lot of volume there. What comes after New York? The NASDAQ open. That's a major center open. NASDAQ is where all the stocks trade. And what do we do when we buy stocks? We exchange cash for stocks. So there's going to be some trading that you are going to see coming out of the US open in the NASDAQ. And that's roughly about 2:30 is when the NASDAQ opens. So that 2 to 3 p.m. window is going to be crucial. And then what comes after the NASDAQ open? It's the Chicago open. Like the Chicago open is where all the big traders are, the futures guys, the big guys, the ones that have money you cannot believe.
No one has ever been richer than you are at this moment. What would it take for you to feel secure?
More.
Right, and they can really deploy capital into these markets, and they come from the futures market. So again, you would see a lot of business done by commercials and stuff like that, all going through the futures market. So the other center you want to pay attention to is the 3 p.m. Chicago open. And what are you looking for in each one? Is volume. Right, so we can see in the New York open, we posted massive volume, and that became an additional demand zone. How do I draw these demand zones? I take a third of the candle, right? And why do I do that? So I'm just going to pop up my market profile chart. So if you look at the same bar, right? So this is pretty much a daily bar. So this is an entire day, 1 hour rotation. So it's essentially the same as looking at a 1 hour chart, but each bar is a day, right? So, or rather I should say, each profile is a day. So it gives us a more macro look, whilst we don't essentially need to keep swapping, say for example, back and forth between a 5-minute chart, a 15-minute chart, 20-minute chart, 30-minute chart. That is just a lot of hassle. We don't want to do that. So we want to pay attention to what we're seeing on the profile. So if you notice, whenever we get a big move, say for example this move here, we get a lot of accumulation, which is what we call passive orders, all right, or bids. You'll hear me refer to them as bids and offers. So we can see that we had a bid build up at the 25.68.79 handle, and that's what we traded into and then bounced out. So if I split this profile, you can see us trade down and bounce out. So you can actually see that this is exactly the same thing that took place here, right? So that's an hour rotation. So if you think about all this day condensed into a kind of volume at price view, or let's say a horizontal view, this is what you end up with when you do that, right? You end up with a profile. Right, so if we can see the profile, we can see that pull down into bids, right? And if we split this, right, you could never see this on a candlestick chart. This is actually just a consolidation of a range, but when you condense it, you actually get the picture that the distribution was collected and centered at the bottom, and then we pushed upwards. So this is bids, guys. Buyers are here, real buyers have sat here driving the market. So if you're going to get a response, this is what real support is. This is what professionals call support, right? Real support is when we are trading at a discounted price relative to value. So this is what we call a value area, value high, value low, right? So we hit the bids and then we're back out, right? So if you were a trader, you would want to position against bids. But let's say you didn't have a profile chart. Well, you're getting similar information here, because whilst we could see that there was demand in the past that we were reacting to, which was exactly a prior day, right? But we couldn't see that on the profile because I need to go a few profiles back. But we can clearly see that there was demand down here. And actually, let's just do that for argument's sake. So let's go a profile back, which would be, I believe it's where we had that big run up. I think it's that profile actually. Yeah, that's it. So we had that big move here, and we can actually see that the demand was sitting here. So I always mark off the third of the hour period move. Right? So if we go back to where we were, so that was the hour period move, right? So this is back here. So we get a third of that hour period move, right? And that should be reasonable demand if you're using a candlestick. And guess what, guys? We can actually see the volume is telling us that that's where the demand was. But we can also see that ahead of time, there was a lot of buying going on that you couldn't see because it was very minuscule, right? The volume was very light, but we can see these little prints of demand. Say, for example, 8 a.m. London open, clue. We can see huge demand come in, and then we base on that demand, and then eventually that's what translates into that really big move. Once we get into 3 p.m., which was the Chicago open, once we get into those big traders, those futures guys, and then we got the move out of Chicago. So this is a good demand area. So dropping back into this, right, and getting this kind of reaction, which is what we saw at the NASDAQ open, then really it's a sitter. You want to be long here. So you want to place your buy order here, stops below, and then look for a run, see if we can take out the liquidity high. Now, what's happened so far? Well, the market, you can see that I've marked out all these zones where there's demand, right? And even including any recent demand. And what you can see is that volume's tapered off. And we can see at 3 p.m. on the 8th, the Chicago traders stepped up, right? So this is what I say when you see big traders paying up and creating demand zones that are not really efficient. So this demand zone is not down here. It's not a discounted price. Traders are willing to pay up because they're expecting a much bigger move. What do we have at the top? Liquidity highs, right? So that's part of my trifecta. If we go further back, you can see I've marked out all these areas where demand was strong, it got broken, we hit liquidity high, so we can build a picture. So the next interesting level is the 127 handle, right? So that's there. And if you look above that, so if we roll forward in time, we look above that, we have these levels here, which are a bit solid. I tend to color code these so that I can see where the heavier demand is versus, or the heavier supply is versus demand and so on. So what's happened today, right? Which is the key. So we can see that Chicago traders paid up, right? And we can tell because the volume, so if we pull that up here, we can see we had higher volume at the Chicago Open. So obviously it's Chicago traders and the market is held above that level. And then we came into Asia and they're 2 a.m. settlement times. So when I say settlement times, that's when all the T1 settlement happens. It happens at 2 a.m. So we get all these settlements coming out of Asia. So that's the key time. 2 a.m., 3 a.m. tends to be it. And we also get the open of the Nikkei, and the Asian indices tend to open around about that time. So you get a lot of volume coming across all of the market. It doesn't matter, cable doesn't have much association with it, but cable is paired to the dollar. So it does have an association with it. It's just that we're not seeing it that way. So again, Asia, we've got volume here. We don't know at this point if that volume is demand or supply because it's early. I frankly am not awake in Asia, but coming to London, right, we see at 7 a.m. we get some volume, and then we get the London Open at 8 and we get a little bit more volume, which is not quite as high as Asia, which is disturbing in itself because London is a bigger session. And what that tells me is that we're going to get a news event, something big this week, and as a result the London traders have chosen to sit it out. So we've got a lot of smaller volume trading versus Asia. But what happened, right? So we tailed up, we based. Now at this stage, what you're looking for, if you're a trader, is you are looking for a bounce and a claim of the high of the London Open, which is 26.57. So if we can claim that high, then it's also going to tell us that, well, the market's responded well to the London demand, right? At this point, we know the Asian traders are standing at 26.59. Here you can see we're getting closes at 26.60, right? So it's definitely now not supply. We should be confident that even though it's at a premium, we can see Chicago traders paid up, so they were happy to pay higher prices. The Asian traders who try to sell, we didn't see the market go down, which means that most of them stayed either in the market or they liquidated the highs, and now they've been bought up again in the London Open. So now we're sitting on demand. So we want to mark that off. So now we know that it's not supply in Asia. We now can see that the demand in Europe, London Open, is held. We're going into lunchtime. The market is offering higher on lower volume, which means that there's no selling interest. So there's nobody opening new positions to get short. Instead, this market is gradually ticking upwards. That is an immediate cue to say that we're going to remain long until we get into a major US Open, which will be New York around about 1 p.m. And then the NASDAQ, we need to see the NASDAQ. Because if you take a position in New York and the NASDAQ opens, it could do something completely different because that's the stock market. And if you look at what happened this day, you can see that in New York, we had a lot of volume at the base, which was happy for me to say there are buyers stepping up. But then we opened NASDAQ, slightly lower volume, but that's where we got the big reaction. So effectively, we stop hunted the traders, right? So we did a liquidity grab on the traders that were trading in London. That's insane. Well, trading in New York, sorry. That's insane. So one group of traders hunted another group of professional traders just because they were too early. Now remember, some of these guys don't use stops, so they're not going to be worried about that, but certainly retail, who would have followed this trade up, would have had stops under here, and if those stops weren't wide enough, then they would have been taken out. So it was a question of how wide were your stops. So that's not really a wise way to trade, is you kind of want to get the timing right. And that is why the time aspect of my trifecta is really important, because if you're trading in a center open that is not strong enough, then it will be a good trade, but you can't hold it. Right, so here we are. So this is where we are at the moment. So we're popping up. We've traded a short-term liquidity high. We normally expect the market to ease and pull back a little bit. So again, if we were going to look to buy this into, say, a US Open, then we need to see a pullback into London, and then we need to see a reaction. Now, because I already know that we got a major news event coming up in the week, and that is reflected in the price action. We've got a liquidity high here, which is not a short-term liquidity high. It is a long-term, mid to long-term, because it's a 3-day liquidity high. We could see the market trade here and fall back. Again, we'll be looking for a volume reaction to confirm that. We also have a supply area here. Based on natural range, I believe we should hit that. And if we're going to ease up, it will come from there. But if we take a look at our profile, we can clearly see that we have a gap in value. So that means we are going to claim the 127 handle at some point, but we have low liquidity. So we got this huge, what we call minus development area, and the market should effectively trade and build momentum in this area, which means that there's a very good chance we could see cables skyrocket, and we're coming into inflation figures. So that is how I like to approach the market. Now, it allows me to do a couple of things. I can position very well. Let's say I did want to do a short-term trade in London. This was a very good thesis. So once we started to settle, I could easily be long at 26.53 and have my stops at 26.47. Right, so it's going to be a very low risk trade, and I look to push this until we get into a major center open, which is going to be coming up shortly on about sort of 1, and then I can look to jump out of this trade. Right. Again, if I'm dissatisfied with my price action, I can choose to break even the trade. So I get to sit in optimal positions, knowing that I've got the full backing of what's going on. Now, if we were to fall back, for example, and we hit this level in the US Open and we got a reaction, it's a short-term demand zone, but then it becomes a good buying opportunity, even though we're trading slightly higher prices. What we would like to see is the market fall back into this demand zone, but sometimes you just don't get that, right? Most of the time when you get into a major trend, you need to be able to spot it and not just be able to do the reversal plays. But again, if that is your playbook, then that is perfectly fine. What essentially you're doing is you're playing with the liquidity highs. That's it. That's all you're doing. So if your playbook is to look for the market to push up and then cut back, right? So you can trade the backside of the move, then you're playing with the liquidity highs. And that is also part of my trifecta. So awesome stuff, guys. I hope you liked the video. Again, if you want me to make more videos like this, where I talk a lot more about the technical stuff and how I would trade it, and just give you a kind of a forward look into what I think is going to happen, then just comment below. Let everyone know this is good stuff. But to my next video, guys, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?